If you're sick of renting and you want to buy a home in 2024, you're going to love this video. We're going to step you through all the government schemes and incentives that are available for first home buyers, single parents, and those people who haven't owned a property for 10 years or more. So let's start from the top. Nathan, the home guarantee scheme, this is a big one. This one allows you to save up to $25,000, even more in lender's mortgage insurance. How does it work?
Effectively, you only need a 5% deposit. Best of all, it's available to 35,000 places each financial year, and it's for first homeowners or those that have not previously owned a property in the last 10 years. Now, it's not specific to any location, so effectively anyone Australia-wide can fit into the scheme. There are price limits depending on where you are located, so it's important you understand that. There is an income cap, so incomes up to $125,000 for singles and $200,000 for joint applicants based on the previous financial year. Effectively, permanent residents and citizens can all apply for the scheme as well.
The scheme is amazing because it allows you to get into the market with much less deposit. Typically, you need a 10% deposit. You pay lender's mortgage insurance, it's insurance to cover the bank, and it can take years and years. With this scheme, you need as little as a 5% deposit. So if you're buying a home in Queensland, for example, for $400,000, even $500,000, say, there's no stamp duty. You just need the 5%, so $25,000, plus around $2,000 for fees. So all up, you could be in the market, you can stop renting if you can save up to $27,000.
Now, some of the lenders traditionally need to see a savings pattern. In more recent times, the banks aren't actually asking for this anymore. So if you've sold your car, you got a large tax return, your parents are gifting you the money, this can all be used. As long as you can get 5% together, we can get you in the scheme and move forward in getting your dreams of purchasing your first home together.
But if you're not quite ready, you're thinking, well, $25,000 seems like a pipe dream. That's okay. Let's break down a way to do that. And a good scheme that allows you to do it, that's another incentive for first home buyers, is the First Home Super Saver Scheme. This scheme allows you to make extra contributions to your super fund. Pretty much you can say to your work and say, all right, my take home is $500 a week. Take off $50 a week from that. Take it off, put it straight in my super fund, and it allows you to save a little bit quicker because you're paying less tax. So this one can be a good one. If you're only a year or two away, a couple of years away, you can start that savings plan. Now, the way I'd recommend doing this is setting that target. You might say, well, my target's $25,000. Between me and my partner, we need to save about $190 a week over the next couple of weeks, and we can get there. So keep that in mind. That can be a good way of getting into the market and planning ahead because, it might take a while.
Now, there's other schemes and grants that are available. For example, you got the First Homeowners Grant. Depending on which state you are in, if you're buying a brand new property, you can get $15,000 to $10,000 in First Homeowners Grant from the state government when you buy a brand new property. You've also got stamp duty concessions. Once again, you get nil stamp duty up to certain price thresholds. Once again, depending on the location you're in. So if you're a first homeowner, there's a bunch of grants, schemes, and concessions available for you to get in the market sooner.
So with the stamp duty exemptions, there are different limits if you're doing vacant land, if it's an existing property. So check that out, it's state by state. We've got a calculator on our website that you can check out. And with the grants also, like Nathan said, it has to be a brand new property that's never been lived in before, or you need to be building, which at the moment has its own challenges. But we have some questions here that are frequently asked. One question I do get asked all the time, Nathan, if I've used the First Home Super Saver to increase my savings, if I'm wanting to get a home with a 5% deposit using the home guarantee scheme, is it possible? Can you layer these? Can I buy a brand new property off the plan that hasn't been lived in before and get the grant as well and sort of triple down and put in not much deposit?
Absolutely. So you can actually sandwich up these grants, concessions, schemes, and as long as you're eligible for them, you can pretty much get the First Homeowners Grant, you can get the Home Guarantee Scheme, you can get stamp duty concessions, you can use your First Home Super Saver Scheme, you can get all 4 government schemes and grants and concessions available to you so long as you go for them and you qualify. So absolutely no restrictions there. If you want to go for it, you can. Now, Jane, are there any disadvantages to going for a government grant, such as buying a brand new property that people should be aware of out there?
Yeah, the biggest thing I'd say is try and work out where you're going to be in a year or two. So a lot of these schemes, a stamp duty concession, for example, usually require you, depending on the state, obviously, to live in the place for at least 12 months. So you can't just move in there, stay for a week, rent it out, get the stamp duty waived and move on. So they're not allowed. And it's the same with the home guarantee scheme, the one where the government is your guarantor. Technically under the scheme, it's only available, it's only supposed to be there while you're living there. If you move out in a year or 2 or 5 years, you need to remove the guarantee, you need to potentially refinance your loan, and you might have to pay lender's mortgage insurance if you try and do that too quickly. So with a lot of these schemes, it's based on, it's provided on the basis that you're going to be living in there ongoing. It's not going to be a rental property in the sort of super short term. So keep that in mind. And speak to your broker about that, because a change in that circumstance could affect how the lenders are going to assess your home loan.
The other thing is try not to be taken aback by, for example, I've had customers before that have said, I've got to get the $15,000 first homeowners grant. So they get very pigeonholed in one solution, which is only looking at brand new properties or constructing. When you take a step back, and I've done this with clients before, where we've looked at the costs of the construction period, interest is calculated and capitalized during this period, the rent you need to have ongoing during that build period. In a lot of circumstances, that 15 grand barely covers the costs associated when you are going through that build period. So try not to be taken aback by going just for the 15 grand because it's free money. Try and have a balanced approach and look at things all being equal.
Another question we have, Nathan, usually is how do these schemes work? When do I apply for the home guarantee scheme? Who does that? Who's responsible for it?
Yeah, effectively, us as mortgage brokers can assist you with securing a spot in the scheme, and we can do that at pre-approval stage. So effectively, what that means for you is once you've pre-approved, you've guaranteed your spot in that scheme for 3 months.
The biggest risk with these schemes is they run out. So there are limitations in the spots, like Nathan said earlier, 35,000 for the first home guarantee scheme. So keep that in mind. If you kind of leave it too late in the financial year, it resets. And also there's no guarantee the bank's going to be doing these forever and ever.
The other thing we see in a lot of cases is you might qualify now in this financial year based on your income, but if you've received a bonus, consistent overtimes, and your income even goes $1 over the caps and limits they've got available, you won't qualify. So you've got to look at your year to date, try and calculate what your income might be next financial year if you're aiming for next financial year. If you are over it, you need to be careful because as soon as you're $1 over, that's it, you don't qualify. And unfortunately, the government hasn't been moving the income caps. So at the moment, it's been 125 since they started the scheme, and same with couples, it's been 200,000. That hasn't increased, although we have seen wages increase to combat inflation.
And also, I suppose borrowing capacities have reduced, so it has had a bit of a tricky effect on people if you're buying on your own. You're previously on $100,000. You know, the banks, before all the rates sort of started going up, you were borrowing $600,000 and $700,000. These days, you're probably getting about 5 times your income, up to $500,000. So it has really dramatically reduced borrowing capacity. So have a chat to us. We can have a look at different things that can influence that borrowing capacity, your credit card, your HECS. We've covered in other videos before, but if you're not sure, hit us up at Hunter Galloway. As mortgage brokers, we can help you identify what grants you're available or eligible for. The process, explain to you how it works. Like Nathan said, if you're building or considering that, run through the numbers and say, well, do you realize it's going to cost you $20,000 in rent plus interest for the next 12 months for that $15,000 grant? Is it really worthwhile? We can run through those numbers. We'd love to help out. Hit us up at huntergalloway.com.au. Until next time, we'll see you guys.